Now let's try to understand identification of separate performance obligations in the contract. So basically what happens is like within a contract there may be single performance obligation or multiple performance obligation. Let's understand this through an example wherein there is a single goods or services. You go and buy from Amazon the Kindle e-reader and the customer is charged for $120. So basically Kindle is itself a single good, then the performance obligation for the Amazon is to deliver that Kindle, single performance obligation. Let's see the example 2 wherein there are bundle of goods or services. So Netflix is there which sells monthly subscription package and they are charging you $15. Now that $15 is charged for movies, for TV shows, for mobile downloads, and these services are not sold separately, meaning it's not like they are selling only downloads, only movies, or only I can say TV shows. These are not sold separately, they together form a bundle. So what we can say here, the performance obligation is to provide access to subscription package within a whole, so this is treated as a bundle. Let's see the third example where the series of goods or services are given. So like the company Siemens, that company is going to enter into a 12-month contract and they are going to provide maintenance services for machinery and they are charging $12,000 for a year. Now what will happen? Each service is relatively same because they will be delivered in the same pattern over the period of time. Then what you will say, what is the performance obligation? The performance obligation is simple, a series of distinct but similar services over the period of 12 months, because at any point of time the machine may have different problems, but they are in the nature of similar kind of services. Then you will be saying that there is only single performance obligation here as well. Let's see the fourth example wherein services are not distinct but still we are combining them into performance obligation. For example, L&T is going to do the construction and they are signing a contract to design and build a factory for $50 million. Now building this factory will involve multiple things, just like designing for the factory, construction heavily are they are interdependent, and the customer cannot benefit from the design without construction. So it's like design is being created, how that will be used? If there is no use of that, then that cannot be used independently, and in that case what will be the performance obligation? It will be simple that it will be combined into one obligation, that delivering the complete factory. So we need to identify if there is a single performance obligation or multiple performance obligation, and why that is needed, because based on that we will be allocating the price. Now let's see the textbook definition of these obligations. So what it says, that a performance obligation is a promise in a contract to transfer goods or services to a customer. Now the transfer may involve what? It may involve single goods or services as we saw above. There may be bundle of goods or services just like subscription package of Amazon, or there may be series of goods or services just like Siemens providing the maintenance services, and that it will be transferred in the similar pattern. Now what it's specifically saying, if a promised goods or service is not distinct, the goods or services are not distinct from other items in the contract, they all are combined into a single performance obligation. This is example of L&T where the goods are not I can say individual, they are combined together. So this is the case of performance obligation textbook definition. Either they can be single single goods or services, bundle of goods or services, or series of goods or services.